All right, John, thank you very much for that introduction, and thank you to everybody for being out here, coming to Miami Economic Forum, and listening to us yap a little bit about some commodities. So I'd like to introduce over here, we got Kevin Ivers. He's Vice President of DCI Group in DC, so they're a leading public affairs firm. At DCI, he provides strategic communications counsel to global clients, focus on LATAM. And if you want to learn more about geopolitics in Latin America, check out his weekly column, Stratcoms. Did I get that right?
Substack.
Okay, excellent. And then we got Mike McGlone here. He's a senior commodity strategist at Bloomberg Intelligence. And I mean, you got your own little newsletter as well, right?
I do write for Bloomberg as an employee of Bloomberg, so I guess it's my content, but they edit it, make sure I behave myself.
I'm sure you do. So I think as a commodities base, let's first start with the macro, and this is going to be more directed to Mike to begin with. So past few years has been an interesting year for commodities, to say the least. I mean, I think in 2021 alone, you had lithium up 442%, you had coal up 160%, nickel 26%, and corn 22%. Fast forward to the year 2023, and then they're all down. You have 81% down for lithium, 10% down for coal, 45% down for nickel, and 30% down for corn. The one that has kind of bucked that trend is sugar, that still stayed up 20% last year. And so in your global commodity outlook that I was reading the other day, you've called this a potential paradigm shift, and you think it's deflationary, a little bit recessionary. Please explain, why do you see commodities being deflationary kind of going forward?
So I think our previous panels and what Anthony said are a good setup. He mentioned Thomas Malthusian. They've been wrong about commodities for 200 years because they underestimate human ingenuity. It's called the high price cure. Every time commodities go up, which you explained, people find ways to come up with either more or substitutes. I'm from the Midwest, used to own a farm, and 1/3 of that corn we planted goes for ethanol. So the key thing that's happening in commodities is also what Eric Bethel mentioned about China. China is basically a early days of a depression, and you can see that in commodities. I mean, an absolute depression. But if I like to describe it, and it's the connection we've also made to LATAM. One statistic a lot of people have heard is the amount of U.S. imports from Mexico now exceed those from China from the first time in 20 years. That's early days. It's just getting started. So I like to say there's 3 strikes against commodities right now. Number one, the high price cure. This is a quote from farmers. Those of us who know what happens in farming land, you create too much with less, prices go down until you don't make money, so you stop producing. They're at the stage now we're just heading lower. That's strike one, high price cure. Strike two is China's in decline, clearly. As we heard in all the other panels, I'd like to see a change in that. I don't see any signs of it whatsoever. I just read the book, The Party, and Eric Bethel nailed that to the T, what's happening there. It's just a simple mean reversion. Those of us who've read any Ayn Rand, Atlas Shrugged, I'm sure there's some hands in this economic. No one? Atlas Shrugged, there's gotta be some. I knew you would have, Orlando. We've lived through a little bit of reversion in Japan. We saw the reversion in the Soviet Union. It's all happening in China right now, and started with, didn't start, but the peak was 2 words, unlimited friendship. So it's a word we discussed earlier that's happening there, that an acronym I learned in the trading pits, GMTFO.
GMTFO.
The world is get me the heck out of China. Just what's happening. Just look what happened recently. The European Union tried to give $50 billion for Ukraine to support themselves. Who supported that war? We all know Mr. Z could stop in 1 minute with one phone call, say, hey, Vlad, dude, the unlimited friendship's not working out. So that to me is the second strike, and the third strike is the interest rate cycle. Typically, commodities, historically copper, the main macroeconomic commodities, do not bottom until well after the start of an interest rate cycle. We haven't even started that. One key, we've mentioned Brazil starting cutting rates. They were one of the first to hike rates. They're crushing it. Their supply in grains now surpasses the U.S. They export more than the U.S. Why? Because they're harnessing the technology in a high price cure. And China is the only country that's so far cut rates. So the way I see it right now, from a commodity standpoint, is severe deflationary forces are just starting to kick in. You got to get below the cost of production historically, cut off that supply, and reinvigorate the demand. So I'll end with kind of my outlooks for prices. The problem is, I have to admit, I was early. I started talking about $50 crude oil 2 years ago. I think crude oil is going to $50. It's $20.72 right now. If you look at U.S. natural gas, the fair value relative to crude oil, just compared to 2019, it's about $40. U.S. natural gas is the number one measure of heat, electricity, and fertilizer in this country. It popped up to 10 in 22 on the invasion. Now it's 2. That's a price that was first traded in 1990. I remember on our farm, we used to cash rent the land. The farmer always complained he cannot get enough money. So think of a producer's standpoint. They can't get enough money for these commodities, so they have to shut off the supply. I think corn, you mentioned, corn peaked around 8. I think it's going to 4. The first time it traded to 4 was in 1973. The Great Grain Robbery, we can dig into that. I think it's going to that level. And copper, the spike was to a new high around 5. I think it's going to 3. That's just normal reversion to commodities, but it has some major macroeconomic reasons to do that. And it's part of the tilt, I'll end with this, of China in reversion that's nothing but positive and good for LATAM and South America. It's all that, I'm from the Rust Belt. Most people in the Rust Belt just absolutely despise China. Because everything is made in China and that's where our jobs are going. That's just the sense I felt from family members. Like Anthony, I have family members that are mostly blue collar. So it's that reversion, but all that is starting to tilt to nearshoring, reshoring, which means Mexico, South America, and it's nothing but deflationary forces for commodities. The key thing I'll end with is so China's in a depression. I don't know what stops it. America's crushing it, as we mentioned, the previous panel mentioned 500 basis points of hikes, and we're still crushing it with employment. And the tilt, if there's one key thing, is if the U.S. stock market has to stay up or keep going up. So if it goes down, just drops maybe 5% this year, that's a severe deflationary force globally. That's what I'm worried about as a strategist in commodities.
And so commodities overall being deflationary, do you see a commodity in particular that's going to be bucking that trend and is actually going to appreciate this year?
Gold. Sorry, I should have mentioned that. Gold. And I mentioned, where's John? Yeah, John, you've got that gold tie. And I see that because when I first started at Bloomberg, I made sure I wore a gold tie. Because if you looked at the trends, this was 8 years ago when they took my picture. Because that's the one commodity that has an enduring upside. First of all, there's the biggest central banks in the world are buying, the deepest pockets on the planet are buying gold. China, most notably, and they have the ability to print fiat currency and convert that fiat currency to gold. There's this major attempt at de-dollarization. So where do you go? Well, there's no other currency even close on the planet to the dollar. And I liked when Jamie Dimon recently pointed out, when the U.S. was downgraded, is the countries that were still higher rating were under the protection of the U.S., and the Russian tanks could typically roll down in a few days if we didn't prevent it. But gold, to me, is the only commodity that has an enduring upside, and I don't see what stops it. I think it could dip below 2,000 in U.S. dollars, but it's just a matter of time it goes to 3,000. Gold, what has it going for it? It's the third largest reserve in most central banks, and limited supply, and there's unlimited amount of fiat dollars there it's measured in.
So let's not let Mike have all the fun on the macro side. Kevin, any big macro trends that you're tracking that you want to share?
Sure. Well, I know we're right before cafecito, so thanks for hanging in there, everybody. It's been a great day. It's been a long day, but a great day. So,
John, are we gonna be alfajores at the cafecito?
Speaking of, so anyway, we at DCI, we spend a lot of time looking at macro trends in policy and the political end of commodities. And for Latin America, there tends to be a political cycle that goes along with the cycles in commodities. So let's look at the last big commodity boom, the ramp up, the duration, and then the aftermath. It was very illustrative about the political cycle. China, of course, was a major driver of demand at a time where the United States went into a severe recession, and the dollar became quite cheap. So there was an enormous boom in the region, as we all remember, and the political cycle around it, which created the policy frameworks, surely showed itself to have been quite poor. When the boom ended, the region started tipping into a pretty deep recession. And these corruption scandals, the graft scandals, were atrocious because why? Commodities, by and large, whether, there are some arguable exceptions, particularly we talk about nearshoring and manufacturing, but commodities generally still are the key or a key wealth generator in Latin America. And the question then becomes, is the fiscal framework going to be developed to channel that wealth generation towards formal economy development through value-added products, or is it going to be channeled into state-driven activity, which, of course, does not typically, is usually very thin activity and not very sustainable over the long term. Certainly doesn't lead to deep development. That's why we are where we are right now in Latin America, by and large, if we want to stay very macro. But so now here we are. I think we're at a stage where, yes, commodities prices, the forecast for this year they'll continue to be in somewhat decline. But there are a couple of trends that are very interesting, and they're much more long-term than just this year. Of course, everybody, we've talked about this before, critical metals. The fact that 75% of the world's lithium reserves are in the lithium triangle in Bolivia, Chile, and Argentina
And we'll get there.
at a time where demand for these critical metals over the medium and probably very likely the long term is going to continue to be very strong, is huge. I mean, it's an obvious opportunity. And second, there's an interesting trend around what has been a very reliable and renewable commodity that keeps coming every season, and that's in agriculture. So yeah, there are some weather trends that have been depressing agriculture in some countries, and there are some weather trends that could be favorable, especially for Argentina at a time where it needs it the most. And Argentina is now in a place where they are struggling to come up with a policy framework that is radically different from what has been before. A sort of a supply-side revolution in the way in which they're doing their regulation. So what does that mean? For agriculture, export taxes, for mining, royalties. Argentina still has a 3% cap on royalties that miners pay to provinces, which is very different from the much, much, much more developed Chile on the other side of the Andes that has royalties that scale up to 40%. And there's a president that wants to sort of backdoor nationalize lithium by forcing these public-private partnerships that create 50% plus one control by state entities of lithium mining projects. So what is the policy framework going to be? Well, let's just say we've talked a lot about Argentina. I think if Argentina succeeds in making some serious structural reforms this year, as the harvest comes in, as the dollar revenues from those exports come in, if it achieves some kind of fiscal balance, that is going to be a catalyst, I think, for political movements in other countries to say, they're not going to be facing the same kind of crisis, fiscal and economic crisis that Argentina faces now, so that gun to the head motivation to do radical changes is probably not going to be present in a lot of these other countries. But it is a great opportunity to start doing the work. It's at a time in the cycle when the prices are declining or flat, when you have to start getting the policy right. It's not when the money's rolling in and the state entities are, chowing down at the buffet table. That's not when reform happens. That's when it goes backwards. And that's certainly what we learned in the last cycle.
Can I piggyback on that one just a little bit? Having been a farm owner in the Midwest, 10 years ago, we didn't really care too much about Brazil and Argentina. Now it's every other day we talk about production, particularly this time of year, because last year, Brazil did the maximum what you expect in a higher price cure. All this technology that's really started in the US and techniques is trickling down, and they are crushing it. They're one of the first countries to raise rates before the Fed. Biggest soybean supply ever. Corn, their safrinha corn, which is their second corn, even beat the U.S. Argentina had a bad crop last year. They're going to double it this year. They're crushing it in terms of production, which is bad for U.S. farmers, but it's good for everyone. It's the example of what Thomas Malthus got completely wrong, is human ingenuity, particularly when there's incentive like a war. give us incentive to produce. So I look at that and I see, whoa, this is impressive, and it's nothing but, here's one example I'd like to say is when I say Brazil, it reminds me when I grew up in Chicago, we knew Chicago was the second largest population of Polish people next to Poland. I learned that when the Pope came there in 1979. I live in Key Biscayne. I feel like it's mini Brazil. It's pretty cool.
Well, welcome to Miami. So you mentioned the lithium triangle. 75% of the world's lithium comes from Bolivia, Chile, Argentina. Chile, Argentina are two of the top 4 producers of lithium in the whole world. Lithium obviously is a particular interest to many people because of the input it is in products, most notably electric vehicles. What is something that investors or people who are interested in what lithium goes into, what should they know about the geopolitical situation in Argentina, in Chile, and how it's going to affect lithium output and therefore the products that lithium is then put in?
Yeah, I say just look at the policy framework. You got 3 completely different stories right now, and I think you're potentially going to have 3 very different outcomes in terms of, because the demand is going to be there and the reserves are there. So in a way, they've got the bull by the neck. Bolivia its policy framework and its political culture is set up so that it is essentially a state monopoly, by and large, and it is a political culture that runs pretty much on populism, and that runs the gamut from left to right. The idea that they're suddenly going to get religion and pass a massive structural reform about how the lithium market and the mining market operates to attract innovation and better technology in terms of mining and keeping costs down, ensuring steady production and export, I don't see it happening, sadly. It's a great country, very poorly served by its politics. They've made a decision. They've decided that China and Russia will be their main partners in at least the near term on these lithium projects. And also, something about Bolivia is that while they have a huge reserve, their reserve is in salt flats that are particularly briny and require a little extra work to be able to get quality lithium out and exported. And given their policy framework, I don't see the innovation, certainly not coming from China or Russia, for them to jump in and be a leader. Chile, I think they went through a policy framework decades ago around the way in which they structured their economy that allowed for them to use their commodity, their metal mining power to develop. They did channel that wealth generation into a formal economy. However, their current government of Gabriel Boric came in with a promise to redistribute wealth and to make sure that the participation of the local communities and the indigenous populations was a much greater share of the profits long term. At the same time, look at Gabriel Boric's approval ratings today. He has, apart from his ideology and his promises, he's proven to be a very ineffective leader. He hasn't grasped the art of winning in politics. He's been chasing after a lot of losing issues. And the elections are coming up next year, I believe, or 2 years. So next year. So I don't know whether his national lithium strategy is going to survive. I think it might exit office with him. And he was an outsider. The political establishment there has provided a kind of economic stability, by and large, certainly for investors. Over the course of several decades. I think if some new amalgam comes in Chile, it's a safe long-term bet that Chile's going to get it right. Argentina is the wild card. To a certain extent, the policy framework is set up somewhat favorably for mining. The governors right now of the provinces are sort of circling Javier Milei and trying to figure out how they're going to live with him, how much they feel as if they have to surrender to him on the fiscal side because the provinces get a big chunk of revenues, all state revenues. But the mining, the 3% cap on royalties of mining is a good starting point for where the lithium market could go in Argentina. If they can attract what Mauricio Macri had promised was that rainfall of investment that never came because he never reformed. If Milei can do that, I think Argentina might be a very, very good bet.
And Mike, anything in Latin America, whether it be lithium or other metals that we should be tracking and in its relation to Latin America?
When I think metals in LATAM, I think copper, silver, and there's been issues recently with some copper production in Panama, but it's consistent that anytime you have little mine productions, there's usually political things that get little blips, and they always the blips become longer term enduring downtrends for copper. Copper is usually about demand. China is one of the largest in both sides. And just to piggyback on lithium a little bit, 2 years ago when I was really much, and even a year ago, I was an outsider pushing against some of my friends at Goldman Sachs who are bullish commodities and saying, no, they're going down. There's 2 key books I read that I think need to be brought in here. One was The Price of Tomorrow by Jeff Booth, friend of mine, and he wrote the book. He said, don't underestimate how technology is crushing supply everywhere. And it's just, once you create that incentive, and the key point I like to make it happen is what's happening macro is we just had such a unique event with the biggest pump in liquidity ever, the war that pumped up prices so high, gave people the incentive to put all this technology to work, and it's working like a charm. So I like to say it's working exactly the way you would expect it to. The first commodities, the most elastic commodities are the grains. You can bring that supply in a year. LATAM, Brazil, Argentina are crushing it. Grain prices are down the most. In fact, they're almost back to levels of 2019. Natural gas in the U.S. has already did it. Metals are kind of dropping more because China's having a problem. And right now, I like to point out when people say, oh, crude oil should go up, I'm like, do you realize if you compare it to what's most of the other commodities in 2019, its fair value is about $50 because it has that war premium. And by the way, Brazil has a decent amount of crude oil they're finding. It's just the technology is moving so fast. But it's also ropes into the macro. It's part of the reason that there's a lot of room for the central banks. Brazil's already done it for the Fed to ease. And commodities are a good guide because they show that deflationary force, and you're not going to get inflation. So I don't see what's happening. The other book I read was called The Domino Effect. That was 2018. It's just about how the technology is moving so fast to extract minerals and things. And then when I hear lithium, I think, okay, do you remember nickel cadmium batteries? And what's the next technology? And that's what most humans underestimate. And there's the books that when you put out a projection of where we're going to be by 2035, you have to also put in a projection of innovation is not linear. It typically goes convex. You just have to go for the next. So I look at it, what's the next greater development? What better incentive than bad guys in Europe starting wars over, and to me it's just where it's going. I don't see, from a commodity standpoint, I don't see anything but more deflation. And I think that's part of the reason the US is just absolutely crushing it with these data, because the whole world sees, well, okay, China's got a problem, their commodities are going lower, and where do I want to be safe? Who's providing protection? And it's the tilt towards US, and that's part of this whole thing started with the unlimited friendship.
And so you mentioned the U.S. and I think being an emerging markets finance conference, one thing that's important is how policies either in Latin America affect the U.S. or in the United States affect Latin America. So one thing, now going a little bit to the soft commodities ag space, that's very interesting is the Forest Act right now. That's actually could potentially become law here in short order. So Kevin, I want you to explain, why should people in this room care about what the Forest Act is, and specifically what will that do to imports of cattle and soybeans from Brazil and other kind of countries impacted by that?
Sure. So the Forest Act is a piece of legislation that has been in the U.S. Congress sort of percolating for a couple of Congresses now. It has picked up a lot of momentum in this Congress. I don't see it necessarily becoming law this year in an election year, but I think if Anthony is correct and Biden is reelected, I think it has a very good chance of becoming law while he's president. Because why? The Forest Act is this is how the US is going to do deforestation rules now that the EU has implemented theirs in 2023. So what are these deforestation rules? They are rules set up to sanction and punish and exclude or in some other way disincentivize products that are produced as a result of deforestation. So who does that really target? It targets It's South America, the Amazon basin, and Southeast Asia principally, but it's global. So the Europeans, in their usual heavily bureaucratic, very opaque way, issued a blizzard of rules that they implemented in a scheme that's complicated, but it gives the bureaucrats who largely wrote it a lot of latitude to not only sanction and ban imports or restrict imports, but also chase the production line. So wood is one of the materials in the EU regs. So it allows the EU regulator and the authorities that regulate this law or implement this law to regulate books that are imported into Europe. I mean, it's imagined as a really extreme enforcement power. So now the U.S. is doing its own, and it was originally understood to be a smaller group of initial commodities, and most notably soy and beef are on that list in the legislation. But then, interestingly enough, it started picking up momentum when a bunch of Republicans started getting onto the bill. This came from the environmentalist movement. But now, and guess where those Republican senators are from? Soy and cattle producing states. So this gives you an idea. The bureaucratic schemes in Brussels are set up largely to eventually become a sort of a gameplay area for protectionist interests. You've seen the pictures of all the farmers and tractors in the streets of France over the last, 10 days. That gives you an idea of how hot those politics are. Environmentalism is extremely important in a lot of those countries' domestic politics. But there is also this pressure that the EU, they always deal with protectionist pressures from smaller political groups by fudging, saying, okay, well, we'll do this, we'll do that. We'll suddenly become really, really angry about palm oil, so now we're going to do all this because, in fact, that's going to protect some of their local producers of other seed oils. So, or their commodity traders. The U.S. law, should it become law, I would say, make no mistake, particularly given the nature of this presidential election this year. You've got two different competing big government presidential candidates, one in office, the other one wanting to get back in. They both have shown a real propensity to use protectionist measures in global trade for a variety of reasons. So I would say if the Forest Act becomes law, it's going to become a tool of protectionism. And who will be most affected by that in this hemisphere? I think it will be Brazil. It will be producers of commodities throughout the entire Amazon basin. And the Brazilians are not paying attention. There isn't a visible diplomatic public affairs campaign going on. This is my profession. This is what I do. I keep my nose to what's going on. The beef companies are not doing it. The soy companies, the sugar. Nobody's stepping up and seeing the threat and trying to impact the debate. In fact, JBS, one of the biggest commodities players in South America, a Brazilian beef company, is now the target of a really vicious public affairs campaign in Washington that just launched in November, attacking the company as basically destroying the world through deforestation and being corrupt and all of these different things. Those sorts of campaigns are going to increase in Washington against a lot of these very big players that are still huge wealth generators in these countries. So I would say that's what you need to look at. If that passes, it should be big news in Latin America. I think we need to sort of raise people's awareness about it.
So would that mean that our price of steak will be going up?
Well, who knows? But there's plenty of supply to go around. But I do think people who look at foreign exchange balances, balance of payments, are going to need to start looking at something like this long term, because once the power to regulate this and enforce it is given to the State Department through sanctions, they can sanction individuals, they can sanction companies, and it's not something that goes through the courts or anything. It's just, okay, we're going to sanction you. That's the threshold. It's at the discretion of the department with OFAC. Once they're given that power to do it against these commodity producers in Latin America around the Amazon basin, that's a very powerful tool of protection, and it's very unpredictable.
And so staying on the kind of ag soft commodities, this year Brazil had a record sugar crop, 42 million metric tons. I mean, just for context, in the United States, we consume 12 million metric tons. So Brazil almost quadrupled our consumption and their production. Mike, you and I were talking about kind of the ingenuity in farming that's happening right now in Latin America. What are some examples of these farming techniques that are driving these increases in output in Latin America for soft commodities and agriculture?
So, okay, I'll go there, but first I want to piggyback on what Kevin said. It's a clear trajectory. If Mr. Trump was reelected, it's very bearish for commodity prices. Drill at will's bad for crude oil. Right there. It's probably really good for gold. It's probably a major push against the dollar. The whole world's going to say, really? You reelected that guy? But here's an example to piggyback on what you said. Just the U.S. peaked use of fertilizer. In where I'm from, we call it anhydrous, anhydrous ammonia. Some of you will know what that is. It's the main thing used for growing corn. Peaked in 1982. And that was my colleague who's from Nebraska taught me that. I didn't realize it. It's all techniques and better seeds is what's really doing it. But here's a fact. U.S. corn yields about 180 bushels an acre. 50 years ago it was half that, 90. It's doubled. That same acre of land of which we own some, you can now produce double the amount of corn, less fertilizer, better seeds, better techniques. You don't plow anymore. It's no-till drilling. Soybeans, same thing. Doubled production in 50 years. So we call it the trend line yield. It just keeps going up. It's partly from the land-grant universities. So what's happening now, some of the latest statistics I heard, I get some of the inside scoop from Bloomberg, these IB chats. One of the guys based in Brazil said, they just started, and in China, they just started passing the use of GMO, genetically modified seeds. It's just a matter of time to catch up. In China, just catching up to what U.S. has been doing because we're just technological leaders. So that's the part of the thing that's great for humans since the beginning of time is we don't work in farms anymore, and I love looking at the Miami-Dade college students. You're young and you're wearing nice suits and you're learning. You're not toiling in the fields, which a lot of our descendants of European peasants don't do anymore. It's just accelerating at the fastest pace ever. So that's where I think, well, if there's anything that's probably going to be long-term good, it's gold and metals, like industrial metals. Because can't make more of them, and we're replacing energy with technology, which means metals. But as far as food and all that stuff, I mean, we could have droughts in certain part of the world, but how many time zones are there in Brazil and Argentina and South America, and how many different areas? I mean, we could get a drought in Corn Belt, but it's made up in Canada or in Brazil. So it's gone so global and so macro that it's a wonderful trend for producers. But like I said, if you're a producer of corn right now, I'd say the price you're going to get right now is probably the same as it was first traded in 1974, and it was actually the average price 10 years ago. If you're producing natural gas in this country, you're getting the same price as first traded in 1990. So for producers, that's just more incentive for incentive. It's just what stops it. It's accelerating on the back of this war and the back of the high price cure. So typically what happens is you got to get bought, you got to get low. I mean, you got to get cheap. It's just the way it works. And we're not even close to cheap yet in most commodities. Natural gas is kind of there, but I think everything's going to follow.
Gotcha. So 30 seconds from each of you. What's the big thing that the people in this audience need to be tracking? 30 seconds each.
Okay, a commodity that's not going to be in anybody's actuarial tables or portfolios, it's cocaine. Cocaine production has doubled since the United States and Colombia basically gave up on Plan Colombia, and it is now singularly responsible for political instability and threats to U.S. and regional security in at least 3 countries, possibly 4 countries today, which was not the case 4 years ago.
Mike?
The main commodity I think is continue, which is metal, gold. A key catalyst for gold to really accelerate would be if the U.S. stock market stops going up for a certain period, a little bit of a bear market, that would accelerate it. And a key thing to keep an eye on is the headline every day is crude oil. And I think we might see at some point this year, we're going to see a 50 handle, see it just going lower. That's what it typically takes to shut off U.S. supply, which a year ago most people said wouldn't go to new highs. I'm like, what are you missing about what's happening in this world? So I'll end with this. just a fact of what's happening. Total excess of supply versus demand in U.S., Canada, and crude oil and liquid fuels is about 6 million barrels a day. That's equal to OPEC's spare capacity. They're both going up. Get it? OPEC's being pushed aside. And in 2008, when crude oil peaked, that was a deficit of 11 million barrels a day. It's just going that way. So that's bearish for inflation, bearish for commodities. It's good for most other things in life.
Awesome. Well, everyone, please give it up for Mike and Kevin.